Good afternoon. Welcome to daily currency update from the currency desk. On the first day of the week, we have some appreciation in the rupee against the dollar. This appreciation has mainly been attributed to the expectations of some reforms to be announced by Prime Minister Manmohan Singh, who is currently handling the finance minister's portfolio. Another major reason for the rupee appreciation was the fact that the EU summit, which happened over the weekend, had the European leaders have come up with some reforms which are expected to help ease the EU crisis. The impact of these measures were more intense on the markets, mainly because there were not many expectations from the EU summit of any reforms from the European leaders. As a result of the EU summit outcome, we have the dollar index falling down from about approximately near 83 levels to 81.43 lows. The main measures announced by the European Union were as follows. Firstly, the forming of a single supervisory body which would involve the ECB. This would help smoothen the functioning of the European Union. Secondly, the Spanish banks would be directly financed by the EFSF facility, and there would be no seniority rules implemented. This means that the flow to the banking system of Spain would be much more smoother and more swift. The EU leaders have also agreed to a growth pact of 120 billion euros. At the same time, what we are seeing in the markets is the ESM and EFSF facilities size is about 500 billion euros, whereas the total debt burden of Spain and Italy, which is under question right now, is more than 2 trillion euros. So what we can understand from this is the European leaders have provided a temporary solution to the problem, but how they'll deal with the European crisis in the future would also be crucial. So for the temporary period, we have some risk investment building up in the markets, but till what time will it sustain is questionable. Also, in the longer run, people are talking about a fiscal union in the European Union area. This fiscal union is very far-fetched implication, and it's not expected to be implemented in the near future. There are lots and lots of complications expected with respect to the fiscal union, but currently markets are building up such expectations. So again, summarizing all this, what we have is, in terms of Europe, in the short run, we have some positivity from the markets, but in the longer run, it is not expected to sustain. This would again bring in some weakness in the rupee. Coming to the Chinese front, we have the People's Bank of China, that is the PBOC, doing some repurchase from the banking system in order to provide some flow of liquidity into the markets. This was touted as a third round of easing done by the Central Bank of China. So after this third round, we could well see another round of rate cut in the Chinese economy. These rate cut expectations are also again helping the markets rally. Another boost to these rate cut expectations was given by the HSBC factory activity, which shrank to the lowest in the past 7 months. Again, there is further expectation of some easing or some support, some stimulus for growth to be provided by the government authorities or the central bank in China. In terms of the Japanese economy, there is some speculation as to the current government faltering and some ministers resigning from the current government and forming another opposition party. This would degrade the political stability in Japan, and hence we could see some depreciation in the yen against the dollar and against the rupee as well. In terms of dollar, we recommend a sell near the first resistance, which is touted at 56. In terms of euro, again we expect the negativity to continue and not sustain, so we have a sell on rise there as well. This sell position can be initiated around 71 levels in euro. In terms of pound, again we have a sell on rise, but herein a strict stop loss needs to be maintained of 88.75 in the spot markets. In terms of Japanese yen as well, we have a sell on rise trend, so we could expect a temporary bounce back, but in the longer run we will witness a fall. Fresh sell positions can be initiated at 70.50 levels, with keeping a target of 68.77 in mind. Thank you.